Good morning, everybody, and welcome to Ask Me Anything. This is the March 30th, 2018 edition of Ask Me Anything webinar, where you can ask Tim Vasko, our founder, any question you like about blockchain or Blockcerts, credence code. And today is a kind of a special day. Last week was the last day of our 5-cent tokens. Today we're up to 10 cents. And given some of the recent developments in the company, I don't think 10 cents is going to last very long. So, Tim, why don't you give us an update really quick on what's been going on with the company, and then we'll start diving into questions from the audience.
Okay, that's great, Jay. Thanks, and welcome, everybody. First of all, I'd like to say we've had a great first quarter. This is the end of our first quarter of 2018, and happy Easter to everybody. We have had an amazing first quarter. As many of you know, I traveled the world in January for about 3 weeks. And from that, we will be announcing in our first quarterly report for all our Blockcerts insiders the agreements we've reached in 2 countries other than the United States and Canada. And of course, we've got a lot going on in North America, but we're now officially global in the world. In addition to that, we'll be announcing our new Blockcerts Insiders portal, and that will be the first founding portal for all the information on Blockcerts. And anybody who's registered during this quarter will be able to create a Blockcerts token wallet and start actually using their Blockcerts. So by end of the second quarter, we'll have Blockcerts in circulation and have completed our utility token deployments. And we'll talk a little bit about that today, I think, Jay. So it's been a crazy quarter. It's been exciting. It's been a lot of technical achievements, and we're just really, really ready to go now for Q2 2018. So like you say, 10 cents isn't going to last very long. We've gotten a long way in just a couple of months here.
Perfect. And I'm going to dive right into the questions now. We've got one that comes from our friend Jim up north, and he's asking, this kind of dovetails on what you were just saying. When people buy tokens, these are future tokens, of course, but when investors buy tokens at 5 cents or now 10 cents and later at a higher price, when they become generally available to the public, what is going to be the benefit to the token holder? How are they going to be able to monetize or take advantage of the tokens that they've been buying?
Well, tokens are transaction units. So let's talk a little bit about what a transaction unit means. Every token will go through processing a transaction, and for every transaction that takes place, depending on the complexity of the transaction, there will be revenue or a charge for that transaction. So think about it like this. It's just like paying to complete a contract, but instead of maybe in real estate paying a large brokerage fee like 5% of a $400,000 home, this could be a couple $1,000s to do that same transactions. That's where smart contracts are going to come in, and the tokens behind that will get a percentage or a pro rata share of that transaction fee for being effectively the software platform that enabled that to happen. So it's a win-win situation. The token holder makes money, the transaction gets done at a vastly lower cost than what exists in the marketplace today. So as smart contracts proliferate, these transactions will happen more and more. And as long as you're holding that token, you'll be making money on every transaction.
Sweet. The next question comes from another frequent visitor to the Ask Me Anything webinar, and that's Kathy. And Kathy's asking, basically what she's saying is that all of the regulatory actions are creating this environment where people are starting to get a little afraid of ICOs. They're afraid that they're going to get involved in something that's going to have some kind of regulatory backlash. Or and then she's been seeing a lot of articles about this. So she was asking basically what's going on in the regulatory world that you're aware of.
Well, I think the regulators are looking at, did all of these offerings that happened in 2017 happen in compliance with the securities laws? And billions of dollars were raised. A lot of those coin ICOs were raised based on a white paper and a promise, and just to drive the capital raising coming in, obviously, which it worked. But did it comply with the US securities laws or securities laws around the world? And the answer is, for the most part, no, they didn't. So what I'm seeing is a return back to, okay, we're not going to allow this kind of thing to happen, in particular in the United States, but in other countries. About 5 other countries banned ICOs altogether. And so going backwards now, all these companies that did these ICOs are going to have to answer to that. As a result, that has caused a fear factor in the marketplace. It's caused a big question. There was one called Tezos, $200 million that caused class action lawsuits. The problem is that it wasn't thought out, and it really was a cash grab and kind of the greed of getting into these and driving the market up. The SEC did an interesting thing, though, in July of last year. They said, but if it's a utility token, if it's effectively capable of doing the transaction, it's not a security. And there's a huge distinction in that. I won't go into it, but it all revolves around this thing called the Howey test. And so when you hear us talking at Blockcerts about all the technical achievements, about not releasing until we have our actual use cases in place, that's what makes us different. We not only have the 5 and 10 cents offering under the proper securities laws in the United States and in other jurisdictions, but we also have true utility. And with true utility, that market's just beginning to evolve. That market's just beginning to say, hey, yes, you can capitalize and use these, because in effect, it's software, isn't it? In effect, everything that we're doing has a foundation in software. So if it works, if you can do what you say you can do with it, the SEC says, hands off, that's fine. It's software, it's not a security. And that's a really major distinction between what happened with ICOs and what utility tokens are.
Great. Jesse is asking about the cryptocurrency market. He said he got into Bitcoin at 12,000. He was real happy when it reached 19. Now it's sitting at about 7. And he's asking, what's going on with the cryptocurrency market, and how is our token going to differ from the price fluctuations that we see in that market?
Well, Jesse, I hope you sold and made profit, because when you look at cryptocurrencies and you look at these markets and you look at these exchanges, which also have regulatory pressure on them now, are they legitimate exchanges or not? You have to also look at the economics of investing. And economics of investing in a highly volatile cryptocurrency is almost identical to the economics of investing in something like stock options or derivatives. So to create an example, if you buy the stock of IBM, it's a blue chip stock. And if you buy that, you'll own it, you'll get dividends on it, and you'll be fine. You'll see the stock price fluctuate up and down, but it's blue chip. It doesn't have the amount of volatility that, say, a startup stock has, or even something like a Facebook when it came out at a rate and then dropped. So stocks are one thing, but they have an underlying component, which is a company. Derivatives or options are another thing. Options vary widely, you're banking on the future. They have an expiration date. You can lose all your money, even in an IBM option. You can lose 100% of your money. So the cryptocurrency market fluctuates very, very much like the commodities market or these highly volatile markets, and you better be prepared for that. The underlying asset being something that is complete speculation, and there's not something substantive behind these. It's all based on what market trends are doing. Options are banking on the future of what happens with the stock, not the actual stock. So they're much more risky and they're much more volatile than the underlying type of investment you can make that has an asset attached to it. What makes us different, to answer the second part of the question, after that little finance and economic investing explanation, is we are creating a token that will, by definition, always have a smart contract attached to it, and always, when it's being utilized, have a utility to it. So whether it's 5 cents or $5 or $500 generated from that utility, from those expenses I explained earlier, it has a fundamental purpose. It's not just a speculative so-called coin. Another way to look at that, Jesse, is imagine that you invested in a currency like in Venezuela. In South America, we've heard about this hyperinflation currency. One day you have $1 or a currency worth $1. The next day it's worth 25 cents. It's the exact same thing. When a country's economy starts weakening, their currency either goes through hyperinflation or complete devaluation. That's what cryptocurrencies are doing right now. They're going to continue to do that. It's a foundation of economics. It's not really surprising. That's why when people start investing, they go into assets like blue chip stocks, like gold, like something that has a utility to it, a function to it. That's what makes us different. We have a utility, we have a function, we have a token. It's not that it won't go up and down, but it always has a value, an intrinsic value of being able to link to a smart contract.
And I think that kind of answers Harold's question. He was saying, if I buy the tokens, then the only value that I derive is from its utility, or will there be, can I list the token on an exchange? Can I actually sell the token later if I feel like I don't want it anymore?
Absolutely. You can sell the token. The token will have an intrinsic value too, just like you can sell IBM stock. But if IBM comes out with a hot new patent, what happens to their stock? It goes up. If IBM all of a sudden gets is doing something and Microsoft comes out with something new and that's hot, you kind of wish you owned Microsoft stock instead of IBM. There will always be that economic fluctuation, and there's always that opportunity to switch between assets. And just like with Blockcerts, there'll be an opportunity to move these tokens around. So we can't predict the future of how valuable smart contracts will be, or the smart contracts run through Blockcerts. Nobody can. What we can say is there's intrinsic value in building a blockchain that has this kind of ecosystem behind it and owning those particular tokens. So it becomes much more of a moderated opportunity or market upside, as well as adding a level of stability, and that's built into the way we've designed Blockcerts.
Barbara's worried about privacy with all the stuff that's going on with Facebook, and obviously we've had some big breaches at Equifax, Target, things like that. She said, what are you doing to protect our privacy if I'm a Blockcerts token holder?
Well, actually, that's fundamental with Blockcerts. And yes, you should be worried about Facebook and Equifax, but let's look at why blockchain in and of itself is so important. Isn't Facebook a centralized authority of all your information, and wasn't that just proven? So what you have is a billionaire wearing a hoodie protecting your privacy and his board of directors making business decisions on how do we monetize your data. That's what happened with Facebook. And that's a centralized authority. And in fact, that's the fundamental of what blockchain is about. Similarly, Equifax was a 100-year-old company centralizing your private credit data without your permission and monetizing it to the tunes of billions of dollars. I've looked at the 2012, 2013 report by KPMG, I believe, that outlined all the risks of what Equifax had as a structured company in their IT department. This was years before the breach ever happened. Again, centralized authority, officers making decisions based on profits and shareholdings, and not for your benefit for protecting information. So what we're doing at Blockcerts and with blockchain is disrupting and moving that model to a what's called decentralized and distributed basis. Barbara, you will control your own information. You will have your own algorithm, just every bit as sophisticated, if not more, than Facebook. And you will, with Blockcerts, be able to write your own privacy policy. You can use this of mine. You can't use this of mine. And when you sign up for these services in the future, you'll be able to say, if you want me to join your service, you have to follow my privacy rules. And if they breach them, the smart contract will shut them off. So we're taking the power out of central authorities and giving it back to the people whose data it is. That's the power of blockchain. That's part of the power of smart contracts. And it's clear that centralized authorities, we all know this, it caused the problem with the banking meltdown when Lehman blew up in 2008, 2009, Bear Stearns and all of them. That's why blockchain is so disruptive. And that's why we built the Blockcerts model, to take advantage of every one of those weaknesses in existing systems, which is, hey, we're not going to sit here and be the victims of our data and our economics being compromised because somebody's doing it because it profits them. It profits the few, it hurts the many. That's not the way the world is anymore. So that's what's going on. We've designed the system to really put that power in the hands of the users, of the Blockcert token holders. I don't know why every person on the planet wouldn't want to hold their own information in a more controlled fashion through a Blockcerts token, which is really what excites me about our business model.
I can't either. Jim had a follow-up question to one of the pricing questions, and he's worried that if the Blockcerts token becomes too valuable, it could price us out of the market. Maybe it's too expensive to execute a smart contract with Blockcerts if it gets too valuable.
Well, what we've done in the actual initial offering model of the tokens is we've created 2.1 billion tokens. And out of those 2.1 billion tokens, there will be a trust set up that allows the market, or allows the open structure organization we've got for Blockcerts to enter the market and put tokens into the market. So if the price rises, more tokens will come out and drop it to parity. With this very unique model, which we'll introduce in Q2, the open structure organization, what will happen is we'll put in a proof of stake model. And the proof of stake means that the more transactions that go through for a specific industry or type of transaction will create what's called the consensus of how these transactions occur. So what should happen economically, what's likely to happen, is there will be a foundational market economics. This is how much a real estate transaction in this part of the world should cost, for example. And those tokens will circulate, regenerate, and allow for a cost, a balanced cost just like economics do. Understand that corporate structures and profits are not economics. We've designed Blockcerts to be based on economics. So when it comes to pricing that token, economically, it will be priced much more like a commodity, or the price of, say, a bushel of corn, than it will be priced like a speculative currency. And it will be priced based on the transaction ecosystem that's surrounding it. So it's highly unlikely, and if that price goes up to $20,000, great for the people who own it, but there's an intrinsic value that says this is worth $20,000. And the way it will be moderated, the way that price will be looked at by the general global market is, I can do this many transactions through this Blockcert token. And if I can do, Jay, I'll use you for example. If you could do 10 transactions a year through your Blockcerts token, and you invested $20,000 in it, and it returned to you $2,000 a year, would that be a good investment? That's 10%.
Right.
What does the bank pay you right now for a $20,000 savings account or a money market fund?
Less than 2%.
Less than 2%. Exactly. So I look at this more like what happened when Berkshire Hathaway hit $9,000 a share. What's Berkshire Hathaway at now? I don't even know, but I know it went well over $100,000. People didn't stop buying that. Didn't seem to hurt Warren Buffett. That was the old model. This is a new model. This is a new model of ownership and equity. I think you'll see more and more of this because of the centralized authorities being not completely destroyed, but reinvented and displaced from who controls the money. So a lot of this has to do with economics, with finance. I spent my entire life there. When we designed this, all of those things were taken into consideration. And this digital economy will create its own ecosystem, will even redefine how profits and corporate structures are done as this evolves. That's the whole idea of it. And you can see it in almost every facet of the economy today.
Well, I think that ties right into the blue ocean of blockchain, right?
It absolutely is the blue ocean of blockchain. The more economic models that you get involved, the more financial models you get involved, and that are possible to evolve, it creates its own life, just like the internet did.
Great. I want to switch things up on you a little bit. We've got a question about use cases. Please walk us through how Blockcerts can help with production plants. What are some of the applications that you see with smart contracts there?
Okay, so with a production plant, there's a thing called ERP, Enterprise Resource Planning, and there's also a model called supply chain management. So we're actually going to release our supply chain management white paper, which the use case will be around food, to give an example of how a Blockcerts token would work. In supply chain, one of the biggest problem is, and production plants, is distribution, tracking, and waste, depending on what you're producing. So, for example, in food, if I've got a manufacturing facility that has a high risk of shelf life, similar to chemicals and things like this. If it's steel manufacturing, like a car or something like that, the shelf life is a bit longer, but then we have shipping delays and so forth. And in the blockchain, or in supply chain management and enterprise resource planning, we have to get, generally in our global environment, all these resources from all over the world and bring them into the facility at the exact right time. It's called just-in-time manufacturing. It's called lots of things, but just-in-time is what set it, so that production line can run efficiently, and we can get this product out to market at the cost that we said we would. So if it's a car, it's going to cost this, and this is our planned margin. When any of that messes up, when something like a natural disaster occurs, like happened in Japan, and we couldn't get steel out of Japan, guess what happens? There's a huge problem. So what blockchain does for manufacturing, for the supply chain, is it allows for traceability. It allows for eliminating intermediaries who generally consolidate small suppliers. It allows for real-time payments. It allows for transparency. If I have to immediately shift because I can't get steel out of Japan, I can then go to China or somewhere else and ensure I'm getting the proper steel with the right quality from the right supplier, and it's not fraudulent and have weak fault tolerances. So blockchain solves all those problems. As soon as those supply chains are connected, you can start seeing how waste is eliminated. It's not just cost. What about all the things we've heard about historically in the media with child labor in clothing? There's another one. Clothing's manufactured. You can now see transparently where the source came from, where it was manufactured, and do I have 2,000 children locked in a warehouse sewing my clothes? Do you want to wear clothes like that? I don't. Nike suffered from it. Every big brand we know has suffered from some form of this. Is it because all of those corporations are evil, or because the systems and the foundation hasn't been in place to give them the comfort level that what they say in their corporate mission statement is actually being adhered to? Supply chain management is a very big deal in a blockchain. I just finished writing the first part of the paper. Listen to this. The estimate on foodstuffs alone is 2.5 trillion US dollars just by smoothing out the supply chain. The waste on food and rotting is 59% of all supplies. And those supplies generally come from small farmers who have no access to market pricing. It's all done through distributors. In India, Nestle buys $1.2 billion a year. One company buys $1.2 billion a year, one country, one company, from small suppliers. There are 3,500 distributors or 3,500 suppliers in that $1.2 billion, and 1,600 distributors. Almost half of the number of suppliers are distributors just to get the products that Nestle needs. That's what I'm talking about. So in manufacturing, it's huge. It's so big, it's actually our entire economy, global economy. And it will change GDP in foodstuffs, estimated, I think that was by the World Bank, to the tune of $2.5 trillion in global GDP.
Wow.
That's why blockchain is such a big deal.
Yeah, that was a good leading question. So one final question, Tim. Thanks for your time today. Barbara has been reading about this new ICO that's come out, Telegram, $1.7 billion ICO, and she wanted to get your comments.
Wow. Well, it tells you that the ICO market is alive and well. It tells you that raising capital is alive and well. You know what's cool about Telegram is that they did it, and my hats are off to the founders. Telegram was actually started in 2014. So very similar to us, had a trajectory of developing the technology. They raised $1.7 billion and they had 200 million users when they did it. And what they had was utility. So in effect, it's not a lot of utility, Barbara. I use Telegram. I use it every day almost to correspond with people overseas. It's got a big overseas following. It's very much like Skype, and frankly, Skype has more functionality. It's not as cool, and it doesn't have as great a marketing, and it's owned by Microsoft, and people say, Skype, or maybe I don't trust Microsoft. Telegram's got a big following because it's open source, it's nonprofit, any developer can develop into it. There's lots of reasons why they were able to get this community going. But what it did show, based on everything we've just talked about, is that the market's very real. That the utility token, if you have something, even if it's as simple as an instant messenger that's not quite as good as what else is already available out there, it's going to raise money and raise a lot of money. Now the challenge for the Telegram people is, how do I monetize an instant messenger? Skype is owned by Microsoft. And in case you don't know the story behind Skype, it was formed by guys that were doing a big music sharing service, stopped doing that and created Skype. They sold it to eBay for $4.5 billion. And Microsoft then in 2011 bought it for $8.5 billion. So that's the story and the trajectory of Skype. Telegram's an instant messenger like Skype. Even Microsoft has a very hard time justifying and making money off an instant messenger. It's a single trick pony, I call it. So they've raised a bunch of money, just like Snapchat, Facebook, any of the rest of them. Look what just happened with Facebook. Trying to monetize a free service is very difficult. So the one thing I'll ask you to reflect on is we're not doing that. We've got multiple tools. We have an instant messenger as well built into the platform, and we will do smart contracts and we will monetize instantly. This is all based around lowering transaction costs, making it more efficient, creating smart contracts, and there is a cost to that today. There's no cost to instant messaging. There's a cost to transactions today. So if I bring a $25,000 real estate cost down to $2,000, we're saving, everybody wins. The Blockcerts token holder wins. The price of real estate stays a lot more stable than it has in these high growth areas. And the buyer wins and the seller wins. The displaced party, the agent, the middleman. So when we look at Telegram, they did a great job. They did great marketing. They got 200 million people using it. They've now got this open source software out there. It's nonprofit. All those things are really positive. For me, it just shows this is a new way of capitalizing companies. It shows that people are tired of the old way of capitalizing companies. It shows that selling a utility token out there is very valuable and viable. And so there's so many positives there. I think the story about Telegram is yet to be written. Now, what do you do with the money and how successful will you be?
Great. Well, I want to thank everybody for attending today. Thank you, Tim, for some great answers to some tough questions. And don't forget, we do this every Friday, 11 a.m. Pacific time. And we invite you to tell your friends about it. We'd love to have more people come and ask us anything. Thanks, everybody.
Thank you very much. And keep the tough questions coming, everybody. We'll talk to you next week. Happy Easter.